and gentlemen, and welcome to another episode of the Ash Show. I am your host, Ash, and today we'll be talking about a video that I have been working on for a long time. Today we'll be talking about 40 lessons that I have learned during my years trading the stock market. Now, I've lost a lot of money in the stock market and I've made a lot of money in the stock market, so these are just my personal experiences, so please do treat them as that. So I'm gonna try to divide these into different sections so you can jump to whatever section you like, right? We'll be talking about three major sections. Number one is the trader psychology, which I think is a very important section. Number two is the trading strategies, and number three is managing losses. So these will be bite-sized bits of information, just some axioms, just some things I picked up in the market from a lot of people, from people on Twitter, on YouTube, my own personal experiences, all mixed in together. So before we jump into those of you who know me, I'm a huge stock nerd. Those of you who don't, you do know now. I love talking about stocks all the time. I am in my Discord, which is free almost all the time. I am there to answer any and all questions. I put out a daily watch list, which has been really on fire lately. We just had in one day 100% alerts, all for free. I don't have anything to sell you. I just love talking stocks. So if you guys want to jump in, if you're looking for some free alerts, if you have problems with your trading and need someone to help you, please feel free to jump in and join our little community of traders. So section number one, trader psychology. Lesson number one is that you are not a bull and you are not a bear. You are a trader. You have no bias. You need to let that sink in for a second and truly understand what it means, because it's very important. Never forget that. Lesson number two, there is nothing like seeing green on the screen, no matter how little. Book those tiny wins. Let those tiny wins compound. With time, they will snowball into huge winners. There is nothing that will build your confidence more than ending the day green. Even if it's a few dollars, trust me, it is very confidence building. Lesson number three, do not use margin or leverage wherever possible. With tiny moves, you will see big losses on your account and they will freak you out and you might close out your position early. Avoid them wherever possible. Lesson number four, you need to accept the universal, undeniable fact that you will leave money on the table. No matter how good you are, you will never time the bottom and you will never time the top every single time. It is very hard to do that. So this is not something you should aim for. This will cause you to miss out on trades or have your trades turn against you as you chase something that never happens. Alright, so let's get into the second section, which is the trading strategies. So lesson number five is never ever trade against the trend. Guys, I promise you, nothing has transformed my trading as much as understanding to not trade against the trend. I used to blow up accounts because of this. If I have to point out one thing that transformed my trading and made me stop losing money, is being able to identify what the trend is. And this is a whole video on its own. If you guys are interested in, I can make it. But basically you want to be looking at for higher highs, higher lows, or lower highs, lower lows. You want to be looking at the pre-market numbers. You want to be looking at the previous day close. You want to be looking at the 200 MA, things like that. Identify the trend and trade with it. All right, so lesson number six. The best trading strategy is one that is so simple you can explain it to your mom. Seriously, think about your trading strategy. Is it easy enough to explain to a 5-year-old or your mom? If it is, then your trading strategy is good. Keep it as simple as you can. I will definitely be making another video about actual trading strategies. Let me give you a few examples of some very simple trading strategies, right? So for example, you can short stocks that are unable to break the previous day's high, and you can long stocks that are unable to break the previous day's low. This is a very simple strategy. There's a bit more, of course, that goes into it and you need confirmations, but this is the whole idea, right? And you can use that to make tens of thousands, hundreds of thousands of dollars. There is no limits to it. That's literally it. It's as simple as that. Lesson number seven, the daily trend is usually established around 10 a.m. every day. So it is in good form to wait out the first 30 minutes to 1 hour just to establish a market trend. You don't want to be trading on nothing. You want to have structure that you can trade on. Lesson number 8, keep track of seasonal changes, right? For example, 4th of July, this is a time where people move a lot from cities to cities. So you can expect gas prices to go up, right? That means you can long gas futures before July 4th, and you can short it after it even when it crashes down. So keep track of events like that. A little bonus here, we are currently in hurricane season, and I'm currently working on a Seeking Alpha article about a particular stock that I think can run a lot during hurricane season. So watch out for that. Lesson number 9 is building more upon the trend idea, right? So once a trend is established, and let's say it's an uptrend, then you can buy high and sell higher, right? Don't short, don't find the trend. The trend is your friend. Don't try to go against it. Lesson number 10, and I think this is a very important one. If the market is not in an uptrend and it falls down and you buy there, you are catching a falling knife. You are not buying the dip. This goes back to our previous point of don't fight the market trend. Lesson number 11, if the market is choppy, do not take a trade, especially if you're trading options with lower expiries. It will eat away your theta, it will destroy your option contract, you will not make money off that. It is okay to just stay in cash and just sit that day out. Absolutely nothing wrong with that. Lesson number 12, and I'm sure a lot of you guys have heard that, volume is king. Volume precedes price action. You see big volume, you want to get in that play. Lesson number 13, if everybody is anticipating a specific price point, and let me just give you an example. At the time of this recording, Tesla's around $919, and a lot of people are expecting it to go to $1,000. $1,000 might not be a resistance, but it is a psychological resistance. And usually you will get a hard rejection as this point becomes a point of high liquidity, because a lot of people will sell at this specific number, right? Same thing, for example, if SPY gets to 400, etc., etc. Hope you get the point. Lesson number 14, if a stock gaps up, you want to wait first for the morning flush before you get in. Usually there's a morning flush. Lesson number 15, super important lesson. Arnold Schwarzenegger famously said that muscles are not made in the gym, they're made in the kitchen. Same thing applies to trading. Good trades are not made during trading hours. They're made before trading hours, right? You need to have a plan. You need to plan out, create a watch list, plan your entries, your exits, your stop losses, everything beforehand. Remember, if you don't have a plan, you're not trading, you're gambling. And we're not gamblers, we're professional traders. Lesson number 16, speaking of traders. For day trading, my preferred time frame is the 5 minutes. I do not like the 1 minute time frame because moves are very quick and you'll get faked out of your positions quickly. The 5 minute is a nice middle ground. Anything above that, I think it's too high for day trading, but that's just my opinion. Lesson number 17, large caps run on news. Small caps are usually a sell the news situation. Small caps don't have a lot going on for them, and usually people don't want to hold on for a few months until the next big thing comes. So it's usually a sell the news situation. Lesson number 18, if a stock is taking too long to run, that usually means there is no demand for it. It's better to cut this trade and move on to something else. Lesson number 19, stocks do not move in a single straight line up or down. And I see a lot of people who are not very familiar with this. If a stock is running, it will run up, consolidate, and then run up some more, and then consolidate, and then run up some more, etc., etc. Same thing if a stock is going down, right? So it's always in phases. It's never in a straight line up or a straight line down. Lesson number 20, and this is something that we have seen happen a lot with meme stocks. If a stock has a lot of volume coming in, usually the first 1 to 2 dips are eaten up very, very quickly. So this is something to keep in mind. It can help you with a quick scalp, or it can help you not sell sooner than you might have. Lesson number 21, look at as many time frames as you possibly can. I'm sure you've seen these pictures of people with multiple screens. Yeah, sometimes it is to monitor different stocks, but another use is to look at multiple time frames at the same time. You want to make sure that all your time frames align. And an example of that is today, when SPY was not overbought on the 5 minute time frame, but it was very overbought on the daily time frame. These stories did not match and we got a huge drop down. Lesson number 22. Do not buy same day expiry calls or puts if you are planning to hold that trade for more than 15 minutes. Same day expiry are for scalps only. Theta will eat your ass. If you're planning to hold it for more than 15 minutes but planning to sell it in the same day, buy a next day expiry. Lesson number 23. This is a very important one. Your max position size should be 20% and your minimum position size should be 10%. The reason for that is you don't want to go lower than 10% in my opinion, because you will not be getting enough of a profit to justify the risk of the play. You want to have some nice juicy profits while not risking a huge chunk of your account. Lesson number 24, scale into your positions. Don't buy all at once, right? This way you can get better entries if the stock dips down, or you can buy into strength, right? And same thing when you're selling. Scale out and don't sell all at the same time, unless of course you think the stock has reached the max it could for that play. This way you can have runners and you still have skin in the game if the stock runs up more. Lesson number 25 and the final lesson for the trading strategies is that I like to take profits at 20% and at 50%. And by 50%, you want to be only in runners, right? When the stock hits 100%, if you're not out by then or have sold most of your position, man, trading is not for you. That's all I'm gonna say. If you allow 100% position to reverse on you, that's on you, man. That's on you. Alright, so we finally get to the last section, which is managing losses. So lesson number 26, you will lose money. I know you understand that, but you need to actually accept that, because this is the root of a lot of problems when you're trading. Lesson number 27, do not use mental stops. I have seen people, influencers on Twitter, saying that you should only use mental stop losses. Think about this for a second. If you don't have an actual stop loss and you're using a mental stop loss, you're basically admitting that you don't know where to place your loss, so you're just gonna eyeball it. This is not trading. Do not do that, please. Not having a stop loss at all is better than having a mental stop loss. Lesson number 28, and since we're on the topic of stop losses, please do not move your stop loss once you placed it. I hope that you have followed the advice from the previous section. You have already planned your stop loss. This is where you know that below this level, the stock fails, the plan fails. Do not move your stop loss once you place it. You place it there for a reason. Trust yourself. Trust your instinct. Lesson 29. Do not average down if you are day trading. Averaging down only works with swings and long holds. If you're a day trader, do not average down. It will usually turn on you. Just think about it this way, right? Why are you averaging down? You want to save your position. You basically don't want to book a loss. You don't want to see that little red on your screen. Setting aside the fact that this doesn't really matter, right? And you can make it up. This is the problem. This is what's stopping you. Cut your losses here. If it goes down more, then you can buy at a much better price. There is no reason for you to average down when you're day trading. Lesson number 30. Overtrade at your own peril. Do not overtrade. Trust me, this is, at least for me, this is how I usually start losing money when I'm very green on the day, right? So 3 to 5 trades to me is the sweet spot per day. 5 to 7 if you feel super lucky, you had an excellent day, the market is very clear, the trends are super clear. But 3 to 5 trades is usually where I found that this is the nice sweet spot for me. Lesson number 31, after a few years of trading, and if you're at that place, you should start following your gut. Instincts play a huge role. The more scientific version of this is you start acting subconsciously, right? Your mind already knows what to do. You just instinctively start doing it. You just know what's right, what's wrong. If something feels wrong, just follow your gut, stay away. Lesson number 32, your role as a trader, right? You wake up, you sit in front of your screen and you're about to trade. Your job is one thing and it's not making money. Your job first and foremost is preserving your capital. You are sitting there and you are doing everything in your power to make sure that you either have the same money today or more, but never less. This is your first and foremost and pretty much your most important job, right? Start thinking about trading in those terms. Trust me, it'll make a huge difference. Lesson number 33. You cannot cut your losers fast enough. If your plan fails, if a support or resistance fails, if bad news comes out, anything happens, you cannot cut your losers fast enough. Trust me. If you find yourself hoping things will turn around, you're probably overdue on cutting that trade. Lesson 34, and I really like this one. You can be red on the trade, but not the day. You can be red on the day, but not the week. You can be red on the week, but not the month, so on and so forth, right? There's always another day. Lesson number 35, the law of three. If you have 3 bad trades in a row, you're done. Get out, walk, go to the gym, talk to your partner, do whatever you're going to do. You're not going to trade anymore. That's it. You're out. You're done. This is where revenge trading starts coming into play. This is where you start taking big position sizes to make up for those losses. Just go, reset, come back the next day. The market will be there. You have hundreds of days left to trade. Don't worry about it. Lesson number 36, and this is something I have explained in great detail in my Reddit posts, but your stop loss should be placed at an event and not a percentage. I see a lot of people talking in terms of percentages. I have my stop loss at 10% or 20%. Your stop loss should not be an arbitrary number. It should be placed at an event, and by event I mean your stop loss should be below the 200 MA, for example, below the 50 MA, below a support or resistance, something like that, right? It should have a meaning. It should not be a stop loss for the sake of stop loss. And lesson 37, and the last one when it comes to managing your losses, is that stop thinking that everything is the exception this time. Stop thinking that there's an exception to your rule. If it works one time, it worked because you're lucky. The next 9 times you're going to lose on it, right? If you got lucky with an exception, you didn't discover anything magical, you just got lucky. That's it, right? So follow your rules no matter what. Before we wrap this up, especially given the market conditions we're in, I would like to add in 2 kind of bonus general market lessons. Lesson 38, when the short interest for large caps is almost reaching all-time highs, this is a signal for a market bottom. So you might want to keep an eye out for that. And lesson 39, and I think you should know this by now, but your political views, your economic views, your predictions, they mean nothing. Remember this, because this is something that took me a while to understand. The market can and will remain irrational a lot longer than you can remain solvent. So don't stick to your convictions. Be one with the market, flow with the market, right? Take every day as it is and just trade it the way it should be. Alright, so I am sure I missed a whole lot of stuff. This is sort of my first video on this channel, so I don't know if you guys will like this or not. I don't know if you guys will like me or not. If you do like me, if you do like this video, if you want more, just leave a comment down below. I can definitely make a part 2, or I can do something else, or I can talk about something else specific in the video that you like. I can expand on. My coming plans are for more market analyses, some live streams, stuff like that, but I'm hoping to gain traction first before we can do any of that stuff. So yeah, that's pretty much it. A lot of effort went into making this video, so if you guys like it, please like, tell your friends, subscribe, share around. We're just starting out. It will really help the channel grow, and I'll see you on the next one.